Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for October 28th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES right now. We've been mostly trading sideways within the larger range here. This is what we've been kind of updating over the past several months here as we've basically just chopped around ahead of the election. We're likely to see expansion at some point directly after the election. We may even test both sides of this range, up then down, or perhaps down then up. And so we're likely going to test both sides of this range. But until then, we're likely just going to continue to chop back and forth. And right now, we've just hit the lowest lows. Here's the previous week's low, and we've seen a rejection off that level already. The expectation would be for price over the next several days to quietly push up back toward 21.45 to 21.49.5. So right now we're just kind of pushing our way back up. So at least short term, the expectation that as rotations downward, as low as 21.20 will want to be defended for a push into 21.45. All right, let's take a look at the intraday time frame. All right, here in an intraday time frame again, you can see where the rejection occurred right here, the previous week's low price. You can see price bounce off of it, then drop below it, formed a tail, rallied, came back to it, double bottom, and then ran through it, taking VWAP bid as well. Price is now retesting the previous session's close price, and so far bears are defending above that level. So what I mentioned here is that after the rejection, we could look for a pullback into as low as 21.20. That's a key level. And then you also have this 21.22 kind of as a key zone where there's an LVN and a separation between price states. So as high as 21.22, as low as 21.20 here on this pullback, you could see a buying opportunity that allows for that swing move up. Any failure to hold 21.20 would retest lows, but right now, after the initial squeeze, the expectation is that bulls want to defend the next pullback for a retest of the highs at the very least. All right, let's take a look at crude oil. Here's crude. Let's bring up a daily time frame. This will have the weekly PivotBoss pivots. The weekly PivotBoss pivots look at the previous week's high, low, and close price, and then use the weekly pivot range and extensions in addition to those levels. And now what we're seeing here, basically price holding after rejecting off the 52s. So that was very important. We talked about the importance of 52s leading into it, on the day of, and then afterward. And so far we continue to see lower highs day over day, lower lows day over day. We see lower and lower resistance levels. So after the rejection at 52, price dropped and then formed a resistance right at 51. Then price dropped again and formed a resistance at 50. So we're getting lower and lower resistance levels right now. That implies a downtrend is in effect and more weakness ahead. We have a very tight inside day that developed yesterday, so an inside day, and then this would be a double inside day. So it's very, very narrow, tightly coiled price action. As of right now, the crude oil price range is only 60 ticks, which is 50% of average daily range over a 10-day basis. So crude has been averaging $1.20 per day of range over the last 10 days. And right now it's only trading 60 ticks, which is half of a day's range. So there's still more potential range, but you can definitely tell $1.20 of average daily range is quite low right now. So we could be looking at some very tightly focused range action. Above 50, re-squeezes for a push to 52s, but continued rejection at 50s would open up a continuation back toward 48 and perhaps all the way back to major value between 45.60 and 46.69. Let's take a look at the intraday time frame right now. We have a very nice trading range that we've been watching and trading in the trading room right here, for example, 49 to 48.90, and then up here is 50 to 50.10. Basically, that's the upper and lower bands of resistance and support for crude oil right now. Yesterday we were talking about this rejection leading to these lows, that perhaps leading back up, and if we got up here, this would be the area to defend for a rotation back down. So right now is the downswing portion. We're nearly there. The expectation would be for more downtrending behavior to retest 49s during this session. Any push into this zone, bulls will still want to come in and defend and return back to value. All right, let's take a look at gold futures. Here's gold. We bring up a daily time frame with the weekly PivotBoss pivots. Here we go. So gold, what I mentioned before is that it's super tightly coiled. Really stay away from it at the moment until we see major expansion. We have 1260 to 1280, and that's a very narrow range right now where the market is trading. You know, that range right there is so narrow, you know that expansion is going to come, but is it going to come with a false breakout first? For example, is it going to come down, break down, fail, and then rally and try the top just to widen the range? Right now, I just don't trust gold that much the way it's trading. It's had a period of 1, 2, 3 weeks of just mostly sideways action after the initial push downward. And typically speaking, every time price drops in gold, the pop comes very quickly, and we haven't seen that here. So obviously this market is clearly in a holding pattern, so you have to be on the sidelines waiting as well. So be very careful. There is a narrow range from 1260 to 1280, so expansion outside of that range could be significant, at least short term. All right, let's take a look at the NQ. Here's the NQ. The NQ's had a steady pullback. This is about as good a pullback as we've had. Here is the chart since basically mid-June, okay? And from mid-June, this is a 2-day pullback. That's Brexit. We had another 2-day pullback. We had a 3-day pullback. This was a little 2-day pullback. That's about it. That's about it. And then it's quickly bought every time. And right now, we're in the midst of a 4-day pullback that's as good as anyone we've seen recently. Look at this. Up here at 4,900, that's what we talked about before, right? We talked about here, this rejection, the absorption, the squeeze pattern, likely leading to a move to new highs above 4,900. But then we were looking for a rejection above 4,900. Any failure to hold above 4,900 would return prices back to 48.06 half. That's MCV-POC, and that's what's happened. And now, after this pullback, we're now seeing another rejection tail. We're seeing the midpoint line up with the previous session's low. So 4,800 to 48.06 half becomes a very important area for swing buyers to defend over the next several days as this thing perhaps builds out ahead of the next retest of the new highs. So right now, a 4-day pullback about as big as anything we've seen since early June. This would typically lead to a buying opportunity. Now we know this market is different. This market is not just going straight up, it's going up very painfully slow. So this could be a painfully slow push higher as well. Because again, we got to kind of just bide our time until the election. So right now, this is the early idea. This could turn out to be a rejection day as long as price can remain above 4,800. If price can remain above 4,800, look for bulls to defend that zone for a shot at squeezing back toward 4,900 over the next several days. All right, looking at the intraday time frame here. There we go. The intraday time frame, again, very similar to the ES. You can see how price dropped down, pulled back, held, double bottomed, and pushed back above. And now this zone right here, 48.04, is the zone to watch. 48.06, that zone is where bulls want to come in and defend. I'm throwing in 4,800 as well, just to give a zone there. So that area is where swing bulls want to defend, right? So if price drops into this area, you want to see perhaps swing bulls come in time after time and defend. Eventually you see a squeeze higher. So that's what we're looking for here short term. Again, this has been a very quiet market overall with intraday movement. So the swing move may come rather slowly and choppy, but the intraday moves have been very nice. So feel free to play those levels as you see fit. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.